Hey, this is Sasha and welcome to another episode here on Let's Talk Stocks. Today what we're going to do is we're going to take a look at adjusting and rolling your option trade when it comes to trading an iron condor. So stay tuned and stick around for this week's episode. All right, so to get things started, what I want to do is first go over what in the world and what the heck does it mean when we're talking about rolling or adjusting your iron condor. So first thing, you got to understand what an iron condor is before you get to the adjustment part. So here's our iron condor. This is what it's going to look like on the profit and loss picture. So it looks something like this. And of course, you do have your T plus 0 line or curve. That's going to kind of look, well, you got that line there and there. So, and your price might be somewhere over here. So here's your price. And with time, that line will continue to get closer and closer to expiration. So that's your iron condor. Now, the whole point behind the adjustment is that when price gets even closer, now you may think, hey, this is already a little to the right, but really when it starts testing and coming into this area, a little bit before that, you go ahead and tweak and adjust, or the same thing over here. So if it gets into that area or zone, that might be the adjustment point. So in an iron condor, it might be somewhere over here or somewhere over here. When it gets very close and starts testing those outer ranges. You don't want to do it too far because once it gets too far, well, you're already too late for the adjustment. But the whole point behind an adjustment, let's say your max loss you were looking for is maybe somewhere around $300, right? Well, if now your current loss is maybe at around negative 170, well, what you could do is do an adjustment to hopefully not lose your full 300 or potentially wait it out so that way price has a chance to kind of come back into the right spot or go back up into the right spot. So the way the adjustment works when it comes to rolling, so if we're looking at rolling our iron condor position, so here's what we have. We technically have two verticals. So we got a vertical over here, and we're going to go ahead and do a vertical over here. So this will be our kind of call vertical. So what happens is if you're looking to do an adjustment, well, if you have price that's coming too far to the downside, what you do is you get rid of the one side that's giving you trouble, and then what you do is you put on a new vertical. So that vertical might go a little further out and then go this way. Now, if you had that same issue on the upside, well, in that case, well, let's say, hey, the price is moving too far to the right or to the upside. Well, now I could go ahead and move it out. Now, some people, what they do is they say, well, why don't you move the untested side? So why don't you move the side that's not being in trouble? So that way you could make more premium profit. And you can go ahead and do that, but you could get into the point where, well, let's say price goes in the other direction. Now you got a problem of inversion where all of a sudden the side that's healthy and safe turns out to be in trouble as well. And when it comes to inversion here, and when you look at inversion, here's really what you're looking at. So if you have an iron condor right here, price moves up on you. Okay, so now what you want to do is you want to move this out. Well, why don't you get more premium by moving this in as well? Well, what could happen is this snaps back and all of a sudden this line here becomes a problem, and that's where you get kind of that inversion effect or an inversion problem. So let me show you on the trading panel and platform how this really looks and how you would do the adjustments, so that way you can go ahead and understand what's going on and what's happening. Now, before we get to that trading panel, I do want to remind you, if you're watching these videos and you want to check out some of the other great things that we have, go to the website tradersfly.com. There you could go ahead and ask a question where you might be featured on the show. Check out some of the get started pages there as well. And we also have some memberships that you can get linked up to. So if you go to the members section, you can go check out our members site where you can check out some of the other reviews and recaps that we do when it comes to the swing charts, technical analysis charts, and some other things that we have coming soon. And if you really want to get some detailed lessons, check out the Rise to Learn website where we have some courses. And especially if you're into option trading, check out the Iron Condors course right there, where you can go ahead and get some very in-depth and detailed training. Anyways, with that being said, let's go ahead and check out an Iron Condor and do a rolling adjustment. So let's say I go ahead and put on an Iron Condor about 35 days out. And in this case, I'll go ahead and open up my strikes to about 50 strikes. I'm going to go ahead and place a position on, let's say at about 5% or 7% right here, and we'll sell an Iron Condor. And what we'll do is we'll look at this Netflix Iron Condor, and I'm going to go ahead and do these October's 2019. So we'll look at probability of in the money, about 7%. So about 350, 360. Let's do a 10-point strike. 350 and do the 360s. And then the other one, what we'll do is we'll go to also on the put side about here, call it 7-8%. So 230, 240. Let's start there and let's see what it looks like. So we'll go to the selling the 240 and buying the 230, and there is kind of our Iron Condor. So what you would do here, okay, is you would go ahead first, put this order entry in, and let's get filled here in this case. So let's get one contract filled. You might tinker with this. So go ahead, do kind of a working order. You can see it's working. So I'll go ahead, cancel, replace that. And maybe I'll bump it down a little bit, try and get filled. And there we go, we got filled. So now what you're waiting for is for this time decay and theta to kick in. But sometimes a price continues to shift either to the downside or to the upside. So I'll give you a rolling example, let's say to the upside. Let's say this stock continues to move higher, way beyond what you think and believe. And in that case, you know, what you would do is you roll the position. So you have to get rid of the calls here. So the simple way to do that is go ahead, select both of them, analyze the closing trade, or in other words, buy a vertical. So you buy the vertical, and now you're left with the other side of the vertical. So what do you do now? Well, you go ahead and move those strikes. Now, you don't have to move them. You cut your delta in half is kind of a typical approach, but you could just move them 1 or 2 strikes further down. So from 350, you could go ahead now and sell the 360 and the 370, and you sell the vertical there. So I'll go ahead and sell the 360 and the 370. And of course, prices would be a little bit different because now you're getting closer. So here would be my new trade. So here's the original. I go ahead, buy that vertical, okay, which would leave me with that. So I'm basically taking off this vertical by buying it, okay? And then I would add this vertical, which is further and wider out, okay? So it's wider, so I'd get a little less credit, but again, remember I'm doing this kind of real time, so prices would be fluctuating and you'd be kind of closer to that end. I'm just showing you the theory and the concept. And then you'd be left with, so here's our big trade, okay? Then I go ahead, buy that one back, and then go ahead and add that one. So really right now, I'm over here at the 360, but before, without that adjustment, I'd be at the 350. So what's really the point of giving that extra 10 points of room? Well, the point is to give you a little bit of time and cushion to give prices a chance to go back in the other direction, to hopefully save that position a little bit and not get into so much trouble. So as you see it moving, you could slide and shift that position a bit so that you don't become in worse or bigger trouble. And that's really the whole point. And eventually, if it does work out, then great, you're able to save the position and actually turn it into a profitable position. But if it doesn't work out, at least you've cut some of those losses to hedge, to give you a little bit of cushion and room, and maybe allowing that theta to kick in a little faster. And in that case, maybe compensate a bit more because the theta is able to work a little longer. So anyways, that's a basic rolling position. So the way that I would execute this is I would go ahead and just buy this vertical first, okay, in a simple fashion. And there you go. Now I'm out of that position. And now I would go ahead and sell this vertical, and I would do it pretty much very quickly. You know, so that way the price doesn't get a huge chance to move on me. And then boom, and then I'd be in a new position right there. And again, the point is when that price is coming in there or getting close, you know, and it's testing that side, well, I went ahead and just shifted it a bit, hopefully still catching a little bit more credit, allowing that theta to still keep working, even though I took a little bit of a loss on that one side. Because what you're doing is you're losing a bit on one of the sides. So the right side, in this case, or the call side, would be at a loss. And then I would put on another one, which hopefully with time would become more of a win and helping me to compensate for some of the losses that I've had. Anyways, I hope this video was helpful and insightful to you. And if it was, be sure to check out some of the courses and membership areas that we have available. It just helps support the channel and also the team that edits and creates some of these video items behind the scenes, like putting them up on YouTube, because I do the filming and they help me put those things up. Anyways, thank you so much for joining me. Remember to hit subscribe here on the YouTube channel, or go to the newsletter list so that way you get notified as I release other free training content, more in detail, new books that are coming out, as well as courses, and sometimes periodically discounts when we do them. Thanks again, and I'll see you next time.